Good afternoon and welcome to OAG's latest webinar, or good morning if you're listening in from the Americas. I'm Becca Rowland and I'm a partner at MIDAS Aviation, and I'll be hosting the webinar today. It's been a month since we did a webinar last in the afternoon, and we've titled this webinar The Perfect Storm, as in the blockbuster film starring George Clooney. Unfortunately, we haven't got George with us today, but we do have John Grant, our usual analyst from OAG, who's always got plenty to say, sometimes provocative and sometimes wise, hopefully always wise. We've also got with us today Ogaga Udjo, who is a real expertise on the African market, and we're going to be taking a little bit more of a detailed look at Africa today. We often have listeners who message us and say, can we discuss Africa in a bit more depth? And we're aware that we usually focus on the Americas and on Europe and the Middle East as the larger markets. So if you're in Africa today, it's great to have you listening, and hopefully there'll be something for you today. As usual, we're going to be walking you through a slide deck that we've prepared using OAG data and bringing out some of the analysis, and there's some insights that we see in that data. We're going to be looking at questions such as how different airlines are responding to a market that's characterised by extensive travel restrictions, weak consumer demand, and a lack of traveller confidence. As the months pass by, can the airlines keep going cap in hand to governments asking for more financial support, or can they go elsewhere to raise cash? Or is the only answer to cut costs in order to retain their airline? So we're going to see a whole range of airline responses and pointing those out as we go through the webinar today. Please do use your question area in the go-to dashboard to ask us your questions, and we'll try and answer as many as we can, either as we're going through the slides or we'll leave a bit of time at the end to answer them. So let's start where we often do, with a map of where we're seeing capacity this week versus the same week last year, color-coded to show how bad or relatively good it is. We keep having a discussion about whether we should move 0 to green, but we go back and forth on it. So at the moment, we're still not really seeing anywhere green, and the best performers, places like China, are appearing as that sort of cream color, which is is only just over just a little bit of growth versus last year. So John, we're showing flights down 46% compared to the same week last year. A month ago, it was 47%, so not much change, is it?
No, I mean, it's going to take us 4 years at that rate, isn't it, Becca, to get back to where we were? Good afternoon.
Maybe more. I think this week we've started talking about maybe recovery pushing it out a little bit further still.
I think I think I mentioned 2025 is not an unrealistic scenario at this moment in time, but to deal with the immediate, we're just sort of becalmed. We're not going anywhere. Capacity isn't growing rapidly in nearly every market around the globe, and I think I commented 6 weeks ago that as an industry, the next 6 weeks, so from early September through to mid-October, would define the winter season and probably summer 2021, and there were a number of factors that needed to be addressed, and none of those have really made any significant progress. So we're no further forward, and that's reflected in the numbers. Australia, New Zealand are virtually in lockdown, with some discussion about some corridors. Well, corridors and bubbles, as we know, are likely to pop at any moment, so that's not sustainable long term. China is doing very well on its own. Its requirement for international services is becoming more and more questionable every day as capacity grows back beyond the levels that we saw this time last year. And we've got 32,000 employees being furloughed in the United States, and those capacity cuts have still to ripple through. Sadly, I believe American Airlines dropped 9 destinations in secondary US markets from their network this morning. So it continues to just be a picture of reductions, and every piece of growth that we see is just wiped out by a capacity reduction somewhere else, Becca.
Apart from China, where we're still seeing strong growth, and of course it's Golden Week at the moment, or is it just finished? The 8 days of Golden Week in China, where there's been quite a lot of stimulation by the airlines in the market, hasn't there? But again, it's just all domestic, isn't it?
They have. I mean, we've seen some really creative stuff. I mean, right at the beginning when they put a lot of capacity back, you know, they certainly stimulated demand with some very cheap fares, described by some people as cabbage fares, and then subsequently put in some special fares for unlimited travel to the end of the year, although they're increasingly revenue managing those particular fare types. But you know, China had a lot of support from its government, and you know, aviation is an extension of government in China in so many ways, and it's not a similar situation in many other parts of the world, you know, and we could talk for a very long time about state aid and intervention in different parts of the world and what it has and hasn't done, and where we go from here. So yeah, it is just, I said this morning, it's a fascinating situation we see in terms of the data and all of the strategic choices that airlines and countries are facing. It's just unfortunate, but it's also a live, living case study with huge economic and personal impact for so many people around the world.
Yeah, indeed. Let's move on and look at some of these countries in a little bit more, some of these regions in a bit more detail. We've shown this slide previously. I think when we first created this back in March, we didn't expect to still be reporting in this way 6 months later. So the slide's getting a bit busy as we keep having to add columns. So we're showing months through to September, and then just the week here, the latest week in October, the year-over-year change. So China or Asia this time comes under 30% reduction on last year. So that's the China effect, isn't it? We're not seeing a lot of other positivity, are we, in Asia, or is that South Korea and Japan?
Well, both South Korea and Japan are you know, pretty strong in terms of their domestic capacity. That's recovered and is quite strong. But ultimately, throughout Asia, China holds the key to the recovery of the airline industry, purely because of the extent of international services. And both outbound Chinese tourism and business travel, and also inbound, are really what is that is where the 22% capacity gap is. And you can see that in some of the other markets that have, for many years, had a close relationship with China. So, for instance, Hong Kong, notwithstanding its challenges of civil unrest in the last 12 months, Cathay Pacific have essentially been wiped out, and Hong Kong Airport, and indeed Singapore. If you look, as we will do in a minute, on some country data, you know, they have lost millions and millions in revenue, and fundamentally wiped out 2 of the biggest global brands with some of the strongest balance sheets that we've seen around the world. But Ogaga in Africa, you're creeping ever closer to that 50% mark, aren't you? Which is good news. And there's been some positive developments recently, haven't there?
Yes, indeed. Good afternoon, colleagues, and to the listeners from all over the world. I think October marks a really positive and important month for us in the continent overall. This is where most countries have actually decided to open up borders. I think it's important to mention that African countries effectively implemented different measures, but as per the data, we felt the crux of that really between April and June, where it was for the most part fully restrictive, not just regionally, but also within domestic countries. Travel was really restricted, and in most countries it was not allowed. And with South Africa being a major market, opening up its border 1st of October, we saw other countries doing the same things. Of course, this isn't a free opening. Here, where I'm based in South Africa, there are still countries that are not, citizens of those countries are not allowed to visit. but anyone in the African continent can enter into South Africa freely. But I think it's not really in line with market structure, because about 35% of traffic in Africa is intercontinental and 40% is domestic, but that's really heavily weighted more so by South Africa, Nigeria, and probably Egypt, and to a lesser extent the remainder is actually intra-regional. So we do require the intercontinental traffic to really support aviation's recovery, especially because there aren't many countries that have strong domestic markets. But October hopefully should be the glimpse of some new beginnings.
So Ogaga, one of the things we talked about on these webinars before is the sort of lack of government coordination around the globe to tackle some of the problems we're seeing. The fact that we've seen a whole raft of African countries coordinate and open borders or loosen the border restrictions altogether at the 1st of October, are we seeing African countries actually coming together a bit more to work together on this, or is it just sort of coincidence? It just happens to be one move they've made.
I think there's been a pretty strong concerted effort from the public health perspective, more so around the response. So the African Union is obviously quite strong in its presence, and South Africa is currently the chair of it. So there was, from the beginning, there's a lot of regional cooperation, and of course you do have more localized regional organizations such as in Southern Africa, SADC, East African Community, ECOWAS, and West Africa. So I think to deal with the public health crisis, there was excellent coordination. And then soon thereafter, the economic discussion started, where a special envoy was created by the AU to effectively find funds from various institutions around the world and raise funds for the continent. But I think, initially as an industry, we felt that there wasn't the best support from a tourism and aviation perspective, because there was a feeling that aviation is still seen as a peripheral or nice to have versus it actually being an integral and catalytic part of various countries, although at a much smaller base compared to other parts of the world. But I think as time has progressed and the lobby efforts, of various institutions such as IATA, AFRA, ASA, and individual countries and airlines, that has seen a lot more coordination in the last few months. And I think from a standardization perspective, from the testing versus quarantine positioning, we're starting to see some alignment by more countries, although there are some nuanced differences.
Okay, thank you very much. Let's look at the last few weeks in a little bit more detail then. The chart on the left here is really that data we've just seen, but it's just 4 weeks of data, and essentially each of those regions look like there's not been any change. But in fact, when we dig down a little bit more, we look at the overall change. The chart on the right shows week over week. The total numbers show some sort of variation by region. Capacity dropping in Europe and in Asia, but increasing in Latin America and North America. John, is that just a function of the sort of second wave of COVID in Europe and Asia? And
yes, I think so, Becca. I think this is in isolation. This is quite stark and worrying slide, because what we're seeing here is the two geographic regions of the world where perhaps we are already in the midst of COVID-19 spike 2. We can see the impact it's having on weekly flights, and it's quite dramatic now. At the moment, we're seeing Latin America, which after probably 4 or 5 months of lockdown is beginning to creep out and begin to see some new services. And North America, where bizarrely, despite the fact that the CARES Act has just finished and the big airlines have announced 32,000 furloughs, we actually see more flights this week. So my real worry is if we were to see, and I think it's almost inevitable, we will see a second spike of COVID-19 in other regions of the world. What we're currently seeing in Europe and Asia is just a precursor to what we will see in Latin America and North America again. In fact, it's inevitable in North America, given where we are with those furloughs. So it's quite worrying, and with the greatest respect in the world to Africa, 214 additional flights a week is not exactly going to move the needle on in terms of global trade, although clearly very important for South Africa.
Absolutely.
Yeah, I think that's a very important point you've raised there, John. And again, I think it was last year that the latest numbers were done, but Africa currently holds a traffic share of about 2.1% of global aviation traffic, although our population is about 17% of the world's population. And we mustn't fool ourselves in that we were operating as a region from a structurally weak basis. Prior COVID, there was an expectation of about 200 million loss from a net profitability perspective for African airlines. So the recovery is going to be interesting because some of the major players are down, being South African Airways, Comet Limited, and it will be interesting to see how we recover. And hopefully it's an opportunity for supply to actually adequately match the new demand, because there was an excess of that in certain instances across the continent, and it was unprofitable capacity, I might add.
Okay, thanks, Ogaga. Let's look at some of those countries individually. This morning, because we do a webinar in the morning, mostly aimed at Asia, and then the afternoon one, we obviously looked at Asia this morning. So here we've pulled out some of the major markets in the Americas, in Europe, Middle East, and Africa. So interesting that the European countries typically are currently seeing a much weaker level of demand than, or a capacity than in the Americas and elsewhere. John, do you have anything more to add here? Russia,
Well,
Russia very much, have we? They're doing quite well, aren't they? Is that just the big domestic market that they have?
Well, I think the US, looks reasonably positive, but let's not underestimate that it's a slightly artificial situation, because to date we've been protected by the CARES Act, and that has prevented perhaps a more realistic alignment of capacity to demand. And of course we're in a situation where that CARES Act is not going to be extended, at least until we find out who's now in charge of the United States, and that may be 5 weeks away, it may be 5 months away, who knows. So that's really, really difficult. And then Europe has just suffered from a series of weekly lockdowns and further announcements as part of that COVID spike that we're working our way through at this moment in time. So it's really, really tough to see any light in any of these markets. For each of these country markets, it's easier to identify potential risk of capacity being cut further than it is to have grounds for optimism about seeing a capacity recovery in the next couple of months. I mean, the United Arab Emirates, essentially it's international connecting traffic. We know how difficult that is. We look at Qatar Airways, which is principally Qatar, and in May they were back. They've been trying to get back in June, huge increase in capacity, and they've gone back in the last couple of months because it's just unsustainable. So it's a really, really challenging situation for everyone.
But against that, Ogaga, on this chart, the only country we see where they actually went to 100% decrease versus last year, so there was no flying, was South Africa in May. And they have been coming back despite all the problems with the African carriers, or South African carriers. But there is a bit more capacity there, isn't there now? And I think you were saying that, was it Fly Safair were putting a bit more international capacity in? So there are some glimmers of hope there.
Definitely, and I think this graph shows really well how different African countries responded. So in SA's case, we have 5 levels of lockdown that really kicked in at the end of March, but unlike quite a few countries, it was 100% on domestic and international. So we really saw that in May. And then we went down to about level 3, which allowed for domestic business travel. Again, this was not really liked by the airlines because it's difficult to plan your network and your weekly capacity on who is deemed as a business traveler domestically.
It seems to be a misunderstanding or a lack of understanding of how air markets work, isn't it? That you can just
completely
only allow certain
of domestic travelers. So then after some lobbying in the same level 3, which was June, July, we then advocated that, you know, all leisure travel should be open. And that's where you started to see this clawback, you know, June, July, August. And then of course, with October, 1st of October, international borders were open. And I think SAFAIR and Airlink are actually really well placed because, you know, between SAA, as an SA specifically, and ComAir, that's a significant portion of the market down. Both, so in other words, British Airways, Kulula, and South African Airways are all out of the market, which is about 50% of the market. SAFAIR, with its 22% market share, has now been able to really put back strong capacity, not have a lot of competition, and potentially even grow some of their markets. So they filed for regional services, which isn't in their business model. They started with a low-cost domestic business model, and now they've filed, they're looking for approval rather to operate to Namibia, Mauritius, and Zanzibar, which are more leisure, to attract the leisure traffic. And that should be interesting. Airlink has been consistently strong over the years, although a lot smaller as a carrier. They now have about 10% of domestic market share, but their goal is really the regional traffic that SAA has let go of over the years. And given their strong Embraer fleet, they seem to be well placed for that recovery. So they are just continuing on that regional expansion. On that, SAFAIR actually received a new aircraft, I think it was a 737 last week, to bolster their network redeployment. If you look at Nigeria, again, very different example. They actually had positives or additional capacity compared to last year, right up to March, because of Air Peace, who had put in quite a bit of capacity over the last few months prior COVID. And they've opened up their borders recently as well, but they have onerous, actually double testing requirements for passengers going into the country. And I think that might impact demand. And then lastly, Ethiopia, which doesn't actually have a domestic market and is fully reliant on open borders as a large network carrier. They have been pushing repatriation flights over the period, and now they're just trying to get back to whichever markets that they can get back to. And of course, they're in talks to try and assist the ailing South African Airways. So it'd be interesting to see how that actually translates into supply and demand factors across the continent.
So, Ogaga, can I ask, because from someone outside of Africa looking at the whole African aviation scene, South African Airways, I mean, I've remarked on many occasions they're on chapter 77 because they've been there so many times. And Ethiopian Airways likewise have been sniffing around South African Airways many times. Is that serious? Is it a serious discussion, or is it just it's always nice to look at what could be a potential competitor's cost and see if it's good, bad, or ugly?
I think from Ethiopian side, the interest has always been there, and this goes back almost 10 years ago. And even with that, from a cooperation perspective, both SA and Ethiopian are part of Star Alliance. But I remember even back then, there was a lot of contentious relationships just within the Star Alliance. But yes, there's always been a hand offered from Ethiopian perspective. But I think South Africa wasn't as receptive. And now where we are, in our version of Chapter 11, which is actually Chapter 6 according to our Companies Act of Business Rescue, they don't have many options. And from a government perspective, it's expensive to liquidate the airline, but it's also expensive to resuscitate the airline in upwards of around 10, 20, 30 billion rand, which is a lot of money. So it's stuck between a rock and a hard place where a business decision has to be made by sovereign decision makers. So there's a lot of backdoor debates and discussions and negotiations around what is the best way to save this airline. Government has been clear that yes, we want a national carrier. We're kind of willing to give up a little bit of ownership, but that vehicle is another story. And our current laws only allow for 25% of foreign ownership from an airline, so from another airline. So this latest discussion around Ethiopian is now more of a resource provision. So it's not equity, it's about maintenance, skills, pilots, etc. But the counter argument is that South Africa has all of that. What they need is equity. And Ethiopian has made it clear that they do not want to carry the debt burden of SAA's legacy issue. So it really is a political discussion. This goes beyond the nuances and rationality of free market characteristics. So it'll be really interesting to see the political response to this.
So it's watch this space, isn't it? I was interested in what you were saying, Ogaga, earlier about Safair and Airlink really finding opportunities in this situation. And in the webinar this morning, we talked quite a bit about the passenger confidence side of the business at the moment as well. I know Ethiopian have went public with they've announced medical insurance that they're going to cover for travellers between the 1st of October and the 31st of March. Are there other innovative things that you're seeing African carriers or markets respond with to help on the sort of traveller confidence side of things?
Certainly, I think that's an important one because it goes beyond the normal measures of airline planning, in that consumer confidence is a huge one. And we've seen two things. So we've seen airlines do or kind of come up with certain initiatives. So Safair always first to the market on certain initiatives. I think they came out with a COVID cleaning fee, which is basically an ancillary revenue for them, quite early on in the pandemic. I actually saw today that they so a COVID cleaning fee, yes. Right. to deep clean the aircraft, and I think it's about 20 South African rand or something. But they also came out with an insurance product. I think today I saw that on the streams. But some airlines have actually partnered up with other parties to assist in this. But it's very much been around the positioning of, we respond to international protocols. This is actually how an airport or airline is run from a safety perspective. We adhere to international protocols, etc. So it's really around the messaging and following up with all of those things. But I think what's important is the network carriers that are non-African flying into Africa, where we've seen a lot of marketing and initiatives. So Qatar Airways releasing the UV cleaning of cabin cleaning last week. They've also come up with an insurance product. Emirates with its on-site testing. Saudia, who also flies into Africa, got into a partnership with Dettol quite early on in the pandemic to offer, some sort of initiatives and marketing around safety protocols. So I would say the carriers that are non-African operating into Africa seem to have better marketing around that extra layer of customer confidence. But I think there are airlines that are really trying to step up to the plate. And we mustn't forget Africa World Airlines, which has been absolutely excellent in their positioning and just market response to the COVID pandemic. And Ghana was in a good position because they were one of the last countries to close their domestic aviation market as well as borders, but also one of the first to reopen. And ours just been very impressive in how they've responded to consumer confidence concerns and capacity in the crisis.
Right, great. Well, that's fascinating. Let's have a look, go back to or stay with capacity and where we are. This is a slide we've shown before, and we've updated it as we keep doing, so that this shows the capacity. The thick yellow line is the capacity as of this week that we see in the schedule. So all of this up to this week is history, and going forward it's the capacity that we're seeing in the schedule. But as we've seen every week previously, and here we're just showing a snapshot from different months, April, May, June, July, August, there's been capacity to come out, hasn't there? And John, I think our view is probably where we'll end up with the year is this dotted line, which I know the gap under here is another 200 million seats to come out of the market. It's not as dramatic as we've seen before, but we're not confident, are we, that this line we're seeing now that says there's going to be more recovery to the end of the year, that's not going to happen, is it?
There is, I think, very little chance of that happening, Becca. If you track the line back to the 6th of August, you can see that there has been an almost steady decline with a couple of notches of positivity in terms of capacity growth when some major markets have reopened. India being one of them, and the Philippines a couple of weeks ago. But no, there is so much capacity that is still to come out, and in some cases, if you've got a flight or you're booking a flight on some airlines at this moment in time, you've probably got a 1 in 3 chance of that flight operating, because they have so much capacity that they still have to take out of their reservation systems and their schedules. But this isn't about to the end of 2020. This is about what is the sentiment we are carrying forward into 2021 and beyond. And if we cannot, as an industry, find solutions to these major issues about consistent protocols around travel and processes, and standardization of immigration and quarantine requirements if necessary, we're just going to walk into 2021 no further forward, and quite frankly, we're going to compromise any chance of a recovery through summer 2021, because traveller confidence will be destroyed, and it's a really worrying situation for everyone. And it's not just worrying for the very big airports, the London Heathrows and the Johannesburgs and the Houston airports, but also for the very small regional airports. And we're talking here about airlines essentially, but for every airline there is an airport in exactly the same position, if not worse position, struggling to, how does it maintain its 3 daily flights to Amsterdam, and that's the whole of the network it has.
And it's perhaps harder, is it, for an airport to cut its cost base in the way that an airline can? Obviously, we're seeing these large numbers of redundancies now in the US carriers, but can an airport respond by cutting its costs in the same way?
We've seen examples of airports closing terminals and reducing their operating hours, and other such marginal tactics that buy them time, taking advantage of government furlough schemes and other initiatives. But ultimately, an aircraft is a portable asset. It is movable, and it is returnable if you can do that on favourable terms to a lessor or to the manufacturer. It's not very easy to move an airport,
No.
and it's even harder to do anything about all of the work and the assets that you've constructed over 20 or 30 years. What this has done, I think, is and the Greenies will be absolutely delighted by this, has probably put the 3rd runway at Heathrow off the agenda for at least another 20 years. So that that's a positive, at least from one side of the community. But and there are other huge expansion issues as well. Hong Kong 3rd runway, is it required anymore? Big redevelopment at JFK taking place. Well, actually, that probably is required because the airport was in an awful condition. But there is a lot of infrastructure work that was already planned and in process for airports that has got to stop.
And I guess when we start to come through this and traffic recovers, we're going to see airports have to work really hard to chase the air services with the airlines, aren't they?
Well, I think they should be.
I think market position very clearly now, don't they?
However difficult and however valueless it may seem, retaining those relationships with your airline customers at the moment is absolutely vital. They are looking for every piece of help that they can get, every piece of insight and every piece of empathy. And we know airport marketeers and airline network planners are a very close-knit community. So we live on the inside of that on a daily basis. But it's I think it's now there has never been a stronger case for airports reaching out and helping their airline customers and finding ways to creatively help each other through this.
Just to pick up on that point, if I may, around the airport side. So Airport Company South Africa, to your point, John, has actually reduced their capex budget by $820 million from 2021 to 2023. This was already approved spend, but they just don't see the demand coming back that justifies that expenditure. So same impact here in South Africa, especially with some of the more mature airports companies.
And we are, in many parts of the world where we've seen traditional hub and spoke operations, or indeed airlines with multiple hubs, as we see in the United States and to a lesser degree in China, are all of those hub airports sustainable over the next couple of years? Are some of them going to no longer be hub airports but become what are termed focus cities? How's the whole world going to reshape? Is connectivity going to become much more challenging? Because, taking Emirates as an example today, they are trying as desperately as they can to maximize the utilization of their 777 fleet, because the only other option is to fly an A380. And seat assignment no longer exist on Emirates A380s. It is row assignment. What row would you like to have? And I think we have a real challenge, because many city pairs that currently are operated may not operate and may not come back for the next 2 or 3 years. And when they do come back, they'll be starting from a zero base again.
Yeah. Definitely.
I think this next slide I jumped on just as Ogaga was speaking, but this looks a little bit further forward. So this is the winter season for 2020 compared to winter 2019, and so that takes us through to March, and this is the capacity we're seeing. Clearly, much less than was operated last winter, and so that translates into very real questions for airports, doesn't it? What
Absolutely.
do you do? Do you need to shift business models? How do you manage this?
Well, Becca, cast your mind back to 3 o'clock this afternoon when we showed the first slide, and we were saying, the industry is looking at about 46%. What you're seeing here is telling you that there's a lot more that is taken out this winter. And essentially in Europe, we're down at 70% of capacity being removed. And there are airlines that are being absolutely ruthless about that, such as Ryanair and EasyJet, who are just taking the axe to everything that just doesn't look like it's going to make any sense. You look at North America, it says -67. We've still got the impact of those 32,000 furloughs to be factored into this. So this is, quite frankly, it's Halloween come early. It's a horror story.
And just for clarification, we've had a question in. Winter refers to the IATA winter season, so that's through to March. Whether you're in the northern or southern hemisphere, we refer to it as the winter season. So sorry if we've confused anybody there. We've got another chart that looks quite similar, John, but quite concerning. I think you pulled this data out, didn't you, and drew it to our attention. Forward bookings. So in the IATA, the OAG database, we can look at some forward bookings, and this is for the US and Air Canada as well, US carriers and Air Canada. A fraction of the bookings that we saw on the books at this point last year.
Absolutely. So this is looking through November through to the end of January. So it covers both Thanksgiving and Christmas. And there's certainly no Christmas hospitality in any of these numbers. American, Delta and United are, hemorrhaging. There are very little bookings that are coming through the systems. Now, this is bookings that are taken through the GDSs. So it doesn't include direct bookings. However, it is a representative sample, and it's a pretty good representative sample. And what we're seeing here is a combination of that lack of confidence, the fact that people are not prepared to book perhaps more than 3 or 4 weeks in advance because the flight may be cancelled, and they could end up either with a lengthy reconnect or change of booking, or they may be issued with a voucher. And who wants to give their cash to an airline at the moment for a voucher? So it's really difficult. Now, what we are seeing here, of course, is the amount of bookings that were made based on the operation that was conducted between November and January of last year. And I suspect that we will see probably 30 or 40% of current US domestic capacity being cut in the next couple of weeks. So, but it just gives you an example of how bad this could really be in the next couple of months.
And one of the questions we always get is we talk a lot about capacity, and what people really want to know is the loads of the traffic, and that obviously that data is always a little bit, there's a time lag in getting that. But we have been tracking the US TSA data, the numbers of people going through security clearance at the US airports, and so this shows that. So the thick yellow line is the actual capacity last year, and the dotted line is the capacity this year. So we're 49% of where we were a year ago in terms of capacity. But when we look at the TSA data, so it's a proxy for travellers. It's not quite the same as passengers, but it's very close. What we see is the grey line here, the thick grey line, was the number of people screened last year, and the dotted line down below, the dotted grey line, is what we're seeing this year. So TSA throughput put at 33% of where it was a year ago. So that says that the traffic is well below where the capacity is, and the capacity is well below last year.
Yeah, I mean, if we were running with 15 million seats a week, and we're now running with about 5 million passengers a week, then we're running. Even I can work out that's a load factor of about 33–35%. Unsustainable, completely, utterly unsustainable. And that is showing the dilemma the airlines have between this drive for revenue generation and bringing cash into the business, and at the same time seeing operating costs escalate to a point where they're just loss making.
And so we've seen a complete contrast, haven't we, in the UK in the last week, where EasyJet have come out and said, well, we're going to cut back because every route has to be profitable, and we're not going to operate unprofitable routes. And in contrast, and they've said that there's weak demand in the market, BA, which operates in the same market, has added capacity. So completely different strategies here. Is that just a matter of how deep their pockets are, or is one of those got a smarter business model than the other?
I'm not sure about smarter business models, Becca. It's just
different approaches.
Yeah, just different approaches. I mean, everyone is trying to find a way through this whole situation, aren't they? And no one has yet found a solution.
And we've had a comment, and we've had quite a few questions about how do we get out of this, and isn't there an answer in testing or in vaccines or so on, and doesn't that offer a more positive outlook than perhaps the slightly more miserable outlook that you present, John? Is testing or a vaccine, is that the answer? Is that going to fix this?
I think it's part of the solution, Becca, but also it's part of a solution that has to be a global solution rather than a solution that's identified and is being introduced in Dubai or is being introduced at London Heathrow. And it has to be a solution that is provided either on a free of charge basis or on a nominal fee. I mean, charging £150 for a COVID-19 test, which is what's being suggested in the United Kingdom at Heathrow, that's more than the cost of an airfare. And for a family of 4 people, it's just a product for the rich, isn't it? And that's not what we want aviation to be.
So perhaps something a little bit more like the yellow fever card that we use. I've got a yellow fever card that says I've had the vaccination, and I need to present that to get into certain countries. Are we looking at something like that? Is that the sort of coordinated?
Absolutely. I think however archaic it may seem, whether it's a digital passport or it is a validated and a accepted, globally recognized piece of paper that says you've been vaccinated and you're okay to travel. I mean, the idea of doing testing at an airport is just it's a wonderful soundbite, and it's nearly as good as Delta's "will leave the middle seat open" soundbite. But quite frankly, it's fraught with logistical challenges. People are being asked to check in 48 hours or more before departure to avoid personal contact at the airport. So you check in 48 hours before. You are COVID-19 negative, so you can travel. You get to the airport, you're tested, you prove positive. Well, are you positive? We don't know, because there's a lot of margin of error in that, of course. You're denied boarding. Do you get a refund? Does the airline give you cash back? or do they say that you've actually checked in for your flight, and as in normal circumstances, if you didn't make the flight, you lose your revenue, and you lose your money? It's just, we need a coordinated approach from all of the authorities rather than this piecemeal, slap happy, let's do this here, let's do that there. They are all gestures made with the best intent, but they fail to provide the answer that the industry needs.
Yeah.
I think on that point, just to give some flavor on the testing approach in Africa, and I think I share similar frustrations with you, John. So just a few countries here. So in South Africa and Liberia, it's a similar structure where you need negative PCR test results within 72 hours of departure, and you have to download the national COVID-19 tracing app so that when you get here, your movements can be logged. Then in Nigeria and Ghana, for example, in Ghana you have to pay, you need a negative test prior, 72 hours, and when you get there, you have to do an on-site test of $150 US. Then in Nigeria, you need a negative test, 72 hours as well. Then you have to retest, you have to quarantine or self-isolate for 7 days. On that 7th day, you then have to be retested. And if you're negative, you can carry on with your trip. If you're positive, you have to stay for another 7 days isolated. And then in Sierra Leone, close by, it's $80 US. So the inconsistency around costing and procedure just further crashes any potential demand and just certainty in how to plan this trip.
As we were discussing this morning, in many markets, you are required to do a 14-day quarantine in a hotel on arrival in a particular country. Now, that's wonderful, and it's the sort of holiday I want to send my mother-in-law on, but ultimately, it is completely and utterly impractical. And until you get around the situation.
The points you're both making make the point of why demand is weak, isn't it? Without all of this, is there pent-up demand? We can't be quite sure, but it's clear why people aren't travelling. Who would travel under those conditions? And I think to your point, John, about quarantine, we showed this slide before, which is data from Sherpa, which OAG is working with, where they have a database now of restrictions. And this is a little bit misleading sometimes because it's the colour codes show access into a country, and there's a whole myriad of rules and regulations that are quite difficult to assign to one of 4 options. But essentially, it's almost impossible to travel between any 2 countries in both directions and not face some level of restriction.
Yeah, it's frustrating. You look at that map and it visualizes it. If you actually read either the website or you read IATA's thematic manual, which is full of historic what you can and cannot do and visas you require, etc. I mean, you need to be a member of Mensa just to work out whether you can go from Scotland to England. And incidentally, I don't think you'll be able to soon. But it's just ridiculous, the sort of onerous issues and pressures and requirements that have been put on travelers.
Okay, I'd like us to move on now, and we've got a couple of slides that look in a little bit more detail at Africa, because we've got Ogaga here and all his expertise. So this chart looks at 3 different African airlines and then the African capacity as a whole. So we can see in the top left corner in that chart with a yellow and grey shaded area that actually domestic capacity and international capacity haven't been so different. In many markets, we've seen quite a difference between domestic and international, but here, not too different. But when we look at these airlines, Kenya Airlines has barely operated. SAF Air, as we talked about earlier, is now picking up quite healthily with the domestic market, and Ethiopian also recovering reasonably well in their international services. The trouble is, Ogaga, there aren't many strong African carriers in the first place, are there?
Exactly, and this just reflects some of the structural deficiencies that we've had that unfortunately are characteristic of the market in the last few years. And also, just to your point on the first graph between the relationship of domestic and international, it is in a way symbiotic, and we rely on that intercontinental and international traffic. Looking at Kenya Airways though, they have been going through this renationalization plan for the last few years that really started to pick up traction in 2014. But from a COVID response perspective, they also clamped down pretty strongly, even with internal restrictions. So there was no operation for quite some time, and that only got released on the 15th of August. There was also some tit for tat between Kenya and Tanzania as countries, where one day they were banning, the respective countries, and another day they were allowing each other's citizens and airlines into their borders, and that has definitely impacted how the airline has planned. What Kenya Airways tried to do quite quickly was, convert some of the aircraft and really get into cargo operations, and of course repatriation. But they're already in a precarious position with their financial problems, and given the restrictions, it's been quite tricky. On the surface side, of course, they are really going to, if possible, cream the market as much as possible, given that their major competitors are down. And although Mango is allowed to operate, Mango, because of their financial issues, again, isn't operating at full steam. So they are really the larger airline in an open market with pretty strong demand. And I expect to see more of this increase, especially as they, put more domestic flights, try perhaps secondary routes, and maybe look at the regional traffic. And Ethiopian Airlines, again, this is purely based on international and connecting traffic, because that is their model. They are going to definitely benefit from the 1st of October open of many of these countries.
And I know, Ogaga, you and I have talked over the years about what's needed to make African aviation work a bit better and to strengthen the African carriers. And I don't know if, I suspect that you're expecting to see more nationalisation, but we've got another chart here that shows capacity to and from Africa for Emirates and for Qatar. And are we going to see them making a land grab? Are they going to see the weakness of the situation in Africa, and actually over these next months and possibly years, we're going to actually see them strengthen their position in Africa?
Most certainly. I think Africa has always been deemed as a potential, but potential can only last for so long where action is required. And this is a perfect example, both Emirates, both Qatar Airways and United launching services. They are actually going into the markets that SAA has let go of because they're not operating, and SAA 2.0 will likely only pick up in January of next year, if it does pick up at all. And I think it'll be a lot smaller of a carrier. So SAA operated very profitable flights between Accra and Washington, very profitable flights to Lagos, which contributed to the entire network, and of course the only direct flight to New York. And United, in a very smart way, has just picked up on this capacity and demand that will be pent up. Same from a Qatar Airways and Accra perspective, because that flight provided quite a bit of connectivity for SA's entire network. So I think that the market will correct itself. It just won't be with African airlines, and that is why airlines that are in a better position to take up this market share are going to do so, and are probably going to do quite quickly.
Okay, very interesting. Let's move on and look at we've got a slide about jobs and cost cutting here in particular. John's mentioned a few times about the furloughing or the redundancies that are happening at US carriers this month. We showed this slide before. We had a figure of 190,000 airline job losses that have been announced. Some of those were speculative, and now we've got a little bit more data. It's come down to 150,000 that have been, in the press and announced. But the data on the right-hand side comes from the US Form 41 data, which where we've not really seen announcements from the likes of Delta. Actually, what we're seeing is that Delta had a third fewer headcount in July compared to January. So they've already got rid of a third of the workforce. So, John, this is clearly one of the ways that airlines can cut their costs, isn't it?
Well, you can do it. You can do it to a point without impacting operations by hitting management and other areas first, and But ultimately, and what we're about to see is the operational parts of the businesses being impacted disproportionately. They've been protected relatively in the last couple of months. Yeah, this is when we see pilots suddenly, taking other jobs in other industries, and we lose the professionals and the experts and the skills that have been built up over decades, and they may decide it's actually a better lifestyle than that they previously enjoyed. So
So
yeah,
you're saying
it's
that as we come out of this, if this goes on and we lose this significant part of the workforce, actually, as we come out of it, we may have an issue with skills, recruiting the people we need.
absolutely, and you know, type ratings for particular aircraft will have expired, and I see today the FAA are asking or mandating that anyone converting or flying a 737 MAX is likely to require 5 simulator sessions. So you know, whichever way you look at it, it's a horrible picture. If we're going to see a recovery, people will be losing their experience. They've got to retrain. They might have to go in a simulator for 5 sessions because it's a new aircraft. They may have, you know, it's just not a nice place to be, Becca.
Okay, we've got I think we've got a couple more slides. I want to rush through them so we've got time to take a few questions. Industry losses. We've seen a new forecast from IATA, but it didn't go as far as revising their profitability or net losses projections for the industry. It just looked at traffic. So their latest projections, or most recent ones, were from June, the 9th of June, where they were projecting a loss this year of 84 billion. It's going to be more than that, isn't it?
Inevitably, I can't quite understand how you can put a revised forecast out last week saying the situation's worse than we thought it was previously, without actually being prepared to put a number on the loss. Because if it was at 84 in June, trust me, it's probably over 100 billion.
And INDUSTRY reported, I saw in an INDUSTRY report, they're reporting this, airlines have raised 92 billion of commercial bank debt. So that's aside from any money that airlines have got from governments, it's in addition to that. So there's more debt to pay back as well for these airlines.
Yeah, and of course, how much of their cash reserves they've eaten into. You know, the IATA is saying the industry is not going to be cash positive before 2022. You know, we're on track, I think, for over $100 billion US industry loss. And when you look at that, you know, historically we have always said when the industry was very profitable that maybe 10 or 12 airlines accounted for 50% of that profitability. So if those 10 or 12 airlines have been well managed and, you know, they've obviously made losses, but not as much as the others, that's another stark way of looking at the numbers. And as I say, we go into 2021 and there's a car crash coming our way if we're not careful, because if we can't sort out all of these other things, then people aren't going to have confidence and airlines are not going to have seats to offer in the first place. We've got to sort out this whole testing and protocol thing, and there's got to be a breakthrough moment, and it's got to come quickly, and it's not going to be the end of October. That's very clear, because, you know, the UK government has said today, I believe, that they're not hopeful of having any sort of process in place before mid-November now. So, you know, there's another 4 weeks that have just slipped by.
And I think we've got one more slide which sort of talks to that in a way, and it really just on the left we look at capacity for different airlines, the yellow being domestic capacity and grey being international. This is so far this year. And on the right we've got revenue. In every case what we see is that, you know, we know this, it's a truism that domestic capacity, domestic traffic doesn't generate the revenue that international does for these airlines. And so this loss of international traffic through these restrictions is a large part of where the profitability issues are coming from, isn't it? It's just, you close down your international network, you can't fly to those places where people are prepared to spend more money on their flights, then that disproportionately hits your bottom line.
Absolutely, and at this time of year, you know, we're in what would be a traditionally very strong business travel month, conferences, conventions, sales activity, just, you know, a much higher proportion of people who turn left on the aeroplane and pay a decent yield. And they're not turning left, and yields are, you know, pretty dire at this moment in time. So airlines are really struggling because they just cannot get the business market back at all. And we know that when it does come back, you know, it's probably going to be very cash conscious.
So I'd just like to be able to take a couple of quick questions. So we have one from, we've answered as many as we can as we've been going through, but got one from Kirk Demers. We don't have a crystal ball, he knows that, but do we expect the airlines to go back to get more state aid, and when?
Well, there's a whole queue developing at the moment, waiting for the 57 bus to come along Marble Arch and cough up some more money. But I suspect airlines will be going back not only in early 2021, but probably in the second half of 2021. Or airlines would like to go back. I think there is a much more philosophical question about how far and how long can airlines continue to go back to governments, and how much money governments can afford to spend subsidising state-owned entities. And perhaps, you know, this is the moment where we cut the umbilical cord and we say, if you cannot make it commercially on your own, look for consolidation or a solution in the free market.
Of course, it's only certain countries that are in a position to offer aid anyways. Ogaga would know most African countries aren't in a position to make those sort of offers to airlines, are they?
Exactly, and this is where the challenge really comes in. And also to your earlier point about the financing, airlines in Africa for quite some time, most of them have not been lending on the strength of their balance sheet, but rather on the strength of the sovereign through government guarantees, etc. And from an African perspective, state aid will either have to happen or those entities will simply liquidate, because quite a few of them have been insolvent for some time. Of course, they all have their own solvency laws. So it's really that crux question where in Africa, we're also having, you know, to compete with resources. You know, do we give money to public education, public health, and other infrastructure matters, or do we bail out these airlines? And that is really the debate, and a very fervent debate that's happening across several countries as part of the national discourse.
Thank you so much, both of you. We're really out of time now, and so we're going to draw the discussion to an end there. Thank you very much, everybody, for joining us today. The recording of the webinar and the slides will be sent out in the next 24 hours or so. The next webinar will be on Wednesday, the 4th of November, I think it is, so first Wednesday of November. And do stay up to date with all the analysis that OAG is making available on their website, or by signing up to the OAG blog, and that will come to you automatically. Thank you very much, John. Thank you very much, Ogaga, for your insights into the African market. I know it's about time we covered that. So thank you very much, guys. Goodbye.
Thanks.
Bye.